Welcome to the Trading Lounge, and a few members may have had trouble logging into the Trading Lounge website. That's because we moved it to a faster server in the US, so the addresses behind the scenes change. So you'll need to clear your cache or clear your recent history, and then type in tradinglounge.com.au into the browser, and then reset that as a bookmark, so to speak. All right. So look, this is the S&P 500 here on a monthly chart, and the reason for showing this is slightly obvious because of the current market approaching old highs here, and in Elliott terms we see this as a large triangle here. It would have been possible to count this from this third wave here as an A and a B and a C wave through to here, and then an impulse making wave 5 up through here. But one of the problems with this particular move up through here is that we have overlapping wave structures within the move to the upside here. So we believe that it's a triangle in terms of Elliott triangles in 5 waves, and they're labelled in terms of an A, a B, a C, a D. Sorry, an A and a B and a C and a D and an E for wave 4 here. So we should see, quite a strong move down in due course, but we're also still looking for further upside here. So we're still counting little impulse waves to the upside through here as such. So so that's kind of it really. And as you know, for the Australian market as well, when it came out of the GFC, so to speak, we're looking for a 61-point retracement level back up, which will take us around a 5,400. But look, anywhere from above 5,000 to 5.4, 5.5, but that will be in line with the S&P 500 here as well. So we'll continue to track our little 5 waves up there. But and I can see this in Australian stocks as well, not the mining stocks, because we're seeing a higher US dollar, and we'll continue seeing a higher US dollar, and that's putting pressure on the on all commodities really. So that's BHP and Rio make up a good chunk of the ASX 200 and can really sort of drag that down and so forth. But there are other stocks out there that I can see that are completing tops of third waves and going through fourth waves and heading up to their sort of fifth wave. So they're in they're well into their 2/3 of their trend to the upside. So they will turn over with this market, but I just thought I'd point that out here. So now looking at the S&P 500 on the intraday here, the wave count that we've had is still in good shape. As you can see, yesterday's sort of conflict within the US between the president and Congress is needs to sort of unwind and get settled in some way. But it was a sharp shot for the Asian region, but didn't affect the US markets in any way. And wave count is still in shape here, so we'll continue to track this to the upside. So what we're looking for here is essentially up for wave 1 and back for wave 2. And currently in wave 3 to the upside here. So just having a smaller view of that in here on the 2-hour chart is simply the same thing, up for wave 1, ABC for 2, up for 1 and back for 2, and, and continuing to move to the upside here. Now, if it doesn't push to the upside there, then this wave 2 here would have to come over to here as a larger ABC pattern through to here. So an A to here, a B in 3 waves here, and then a 5-wave structure coming down here for this structure here, and then we move to the upside. So it's a possibility, but everything seems to be going according to plan as it is. But so look for people trading this market here. You need to find support on the old resistance through here, and as you know that this is group 1 here, the top of group 1, so 1, 2 and 3, or 10, 20 and 30 in this case. If support is found on top of this level here, which it didn't do here, and it may or may not do here, the wave count is suggesting that it will. If we do find support here, then we'll be leaving the 1500 at this stage, and this will also be the same for the Dow Jones as well. So we've just got that alternated B wave there, as I just mentioned, but its wave count here on the 30-minute chart here for the Dow Jones is pretty much the same here. We've just been counting all this through here, and yesterday we were looking up for wave 1 and back for wave 2. So let's just sort of see how this goes, but it's all going quite well actually, so let's just see how we go. But this wave, this current structure here, could be in terms of an A, and then an A and a B and a C for the B wave, and the C wave down, and then moving up through here. But the B wave here is quite large, in compared to the pattern that occurred here, so it's more likely that we are on the right track. Intraday traders would need to be looking for support on a retest of 14,100 or the top of group 1 here, which would be the 14,130. So yeah. Europe's pretty much the same as well. So when we're looking at the FTSE, as we're looking at yesterday, having falling in play with the S&P 500. So the next step on here is to, if you're not long in this market and thinking about it, well then the next step would be looking for retested support on the 63.72 there, and scaling into that point there, and pretty much staying long really. You can stay long through the 64, just give it room to move across here, because we would be going from a wave up for wave 1 here, back for wave 2, and up for wave 3. But once again, if that B wave is the case in the US indices, then we'll see this as an A and a B and a C coming down through here, and then moving to the upside here. So 5 waves up, an A and a B and a C wave, and then up through there. The Australian market is pretty much the same as well. Excuse me. In terms of its pattern here, this particular pattern through here, because we had this sharp drop here yesterday, it can still be up for wave 1 here and back for wave 2 here, but we need to look at the options here. So this moving down through here can be the A wave. This whole move here could actually just be the B wave here, and if that is the case, then we're going to get 5 waves to the downside, and the 5 waves to the downside would be down for 1 here, back for 2 here. This would be the 3rd wave, the 4th wave, and then the 5th wave would be down here in 5 waves, so making a new low here or close to it. So just be sort of careful of that. If you're looking to trade long today, make sure you've got a retested support on the midpoint here, the 50-50. If you miss that, then the next safer bet is the 50-72 up through here. Support on that kind of switches the balance of this correction to the upside, and you can go long from that point there. Yeah, but as you can see, it's sort of vibrating across the 5,000 there. And it could get, corrections can get messy, but the way that we sort of see this is that this is a wave 3 here. We're looking for wave 4. Now, wave 4 could be finished to here, or we'll get the C wave down to here, and then this will be wave 4. We're pushing up for wave 5 here, and that would be the top of wave 3. So once that's completed, we still got a wave 4 to go after that, and a wave 5 to the upside. So that's why we'd be looking at the 61.8 retracement level up near 5,400, so to speak. So, but what we need here is a sort of a fully developed corrective pattern, and we need to see impulse waves to the upside. So, yeah, like I mentioned before, it was probably better off shorting the Australian dollar, but that's probably not the case in the morning session here at the moment, because we've got the RBA cash rate announcement at 2:30 today. We've also got retail figures coming out at 11:30 as well for the Australian market, but the RBA announcement is more likely buy the rumour and sell the fact, but we'll look at that in a moment. Let's look at the commodities. Okay, in the commodities, this is the CRB index, the commodity index, and as you can see here, we've got a triangle pattern. This is a little bit similar to the copper market that we've been looking at as well for the London market on the daily chart, the LME, and yeah, so this has obviously got further to move down to break out of this triangle to the downside. Yeah, so yeah, there's further pressure there as well. The other market that I normally look at with this is the DJ UBS commodity index as well, and not a lot of difference between the two of them, but sometimes if I'm unsure about a wave count, then I can sort of move between both of them here, and as you can see here, that from this high up through here, we do have 5 waves down here, and we have been through this before here, and in the third wave here, there's 5 waves in the third wave. So we've got our retracement here, and we've got a little 5-wave down structure down through here as well. So the 5 waves actually give you the direction of the market. So we're seeing, this is also 5 waves here as well in this structure here, and we've got our retracement here, and we're also seeing 5 waves in this little structure here as well. So we can expect a bounce off this for sure, some sort of retest back to one of these numbers here. But all these structures are pointing lower through here, and that's kind of what we expect. Now, when we were looking at BHP and Rio and so forth, if I can just bring up that for a second. I'm just going to use Rio here because you can see that it's got the same 5-wave structure down as the other indices as well, and so this particular move to the upside through here that we've been looking at, we could have counted this in 2 ways, just being a little bit sort of hopeful for the upside here, and it's still a possibility in terms that. And counting this up through here, we can count this, well, from this point here, we've got up for 1, back for 2 here, then up for 3, 4, and 5. So we have that 5-wave structure there. Now that can be a wave 3 or a C wave, and this move up through here can be wave 1, wave 2, wave 3 up here, and we could be still pulling back for wave 4, and then wave 5 up through there. The 38.2 retracement level for a wave 4 comes in at the previous wave 4 of 1 lesser degree, and it's also broken through that. So if this continues down through here, a little bit sharper down through here, then we would have to look at this as being an A and a B and a C wave up through here, and then these markets following the commodity indexes, which will take out these lows down through here. As I mentioned before, the higher US dollar is, putting a lot of drag on the precious metals first, and then the Australian dollar, as we've seen, and then into base metals, and it's really showing up in stock now as well. So we need to be a bit mindful of this. So with these moves down through here, if we see, which is developing at the moment, if we see the 5-wave structure down through here, which would be the 1, the 2, the 3, the 4, and the 5, or we could even be into the 3rd wave here at the moment. But whatever case is once we see a 3-wave rally from here, then we'll look to short that again down through here. So look, they're in a very bearish situation. So if you're holding these long in your portfolios and things, it might be an idea just to get a small hedge in terms of getting a few CFDs on the short side. Don't need to sort of overdo it. I know it's difficult to pull things out of your super because of tax reasons and so forth. But it'd be good to do something. You need to move with the markets to protect. Okay, so the copper market here on that we normally track. As you can see, we're still looking for this wave 5 down here, which will be make the wave 3 here. In this leg coming down through here, I think this is just the little, there'll be 5 waves in here, and I think this is just the 4th wave here. So if we have a look inside of that to this point here, looking at that 4th wave here, coming down for the 5th wave, it's probably down for 1 here, back for 2, down for 3, and a 4th wave here. and then down for 5 in 5 little waves coming through 1, 2, 3, 4, 5 to make the 5th wave from here. If I'm wrong here, then where I'll be wrong is that this market finds support on top of Group 1, the 1, 2, and 3 here, the 3, 5, 3. So while it's sticking to the midpoint here, the 350, and is still in the lower range of the inside of Group 1 here, then we'll continue to keep this particular wave count through here as well. And gold is doing much the same thing in a 4th wave as well, as would be silver as well. So with this gold here, we're looking at the wave 4 here. This is in 3 waves here, so we know that eventually this will be taken out through here. The tricky thing is wave 4s can be after a long move, which is quite a significant an event, and after a significant event it takes a little time to recover, and markets are the same as well. And so wave 4s can get a bit complicated. So we may end up with an A and a B and a C wave here, and then to the downside. So the way that we can look at this is that if the 1572 becomes the retested resistance now, then we can expect this to come down further. So just looking inside of this, if I've done any work here, yep, 15-minute chart here. So we're looking at this 3rd wave to the downside here. We're looking at the 4th wave and the 5th wave moving to the downside. Now I've got the wave 4 here because we've got this little ABC here, but this may just be the A wave here, and an A and a B and a C for the B wave, and then the C wave coming back up through here as a retest for the 1600 basically. But normally a move up here will be the same length as this one here. So if it does move up through here, if this becomes a retested resistance through here, then look to glean a small position on the short side and look to add under the 1565, the lower level of Group 2. This is all of Group 2, 65, 72 and the 80. If it does dance on here and moves to the upside through here, then you can look to short at a failed retest up here. And what you'd be looking for up here would be 5 clean waves up through here, and then looking to short from that point there. So a little bit tricky to navigate through here. So that this market moving down to the 1565, coming back up and retesting it and failing, then you can move in from that point. And silver's the same as well in terms of its Group 2, which is the 2865, 2872 and the 2880, and any move above the 72 here would see a retest of this here. I can see that we've got this strong move here, and this appears to be corrective, and it's likely to see a move through here. But looking into the bigger picture here, we've got this wave 1 down to here, wave 2 to here, and then we've got a nice clean 5-wave structure to the downside here. So really this is like wave 1, wave 2, wave 3, so this is like a wave 4 here. So it should roll over through here, but the way to add to this would be at the 2850 here as a retest. But it does create problems because when it moves into this lower levels of the Group 1 here, it is going to bounce around a lot. So it's not going to be simple. The gold one might be easier actually. Right, the oil market. Just pulling apart this little structure here. Coming up from the 98 here, looking at this as wave 1 here, wave 2 here. Yep, and then we're in the wave 3 coming down through here. So in wave 3 coming down, there'll be 5 waves. So we're looking at this being wave 1, wave 2, and then wave 3 to here, wave 4 over to here, a little A, B, and C here, and then from 4 we're looking for 5 waves down, which would be the 1, the 2, then these little 5 waves down to make the 3rd wave, so forth. So we've still got the 4th and the 5th here to unwind through here. So you can expect a consolidation at the 90 through here. Wait for the second retest. If the second retest fails, then you can look for a short position there. But there is a little bit more downside to go through here. But the other situation of it sticking to the 90 here for a bit longer than one would expect would be the S&P 500 moving to the upside. But if that was moving to the upside, we'd also want to see the US dollar be pulling back into 82 as well. So with the S&P 500 moving to the upside and looking at the US dollar having a retracement in its trend, would see a larger correctional pattern through here such. But the normal case would be for it to pull back to the fourth wave of 1 lesser degree to this point here. So it's probably a good idea to expect some sort of consolidation there. Let's have a look at the dollar. Okay, this is the US dollar here on an 8-hour chart, and the main point here is observing the impulse wave structure to the upside, and we're counting 5 waves within that impulse structure. So the wave 1, the wave 2, and then the third wave being the strongest and the longest, and so forth. So looking at that in terms of up for 1 and back for 2. It's possible to put the top of the third wave here as such, that third wave to here, and the fourth to here, and the fifth to here, to make that larger third here. But I'll just leave it the way it is for the time being, and that would be the 1, the 2, the third wave all the way up to here. And this third wave may not be finished yet, because from the fourth wave here, the 8150, we need to count 5 waves up through here. And when you look at this chart here, it looks like we've got up for 1 here, doesn't it? And back for 2 here, and up for 3 here. And fourth waves are always complicated, so that would be there. And then the fifth wave would be moving up to there. So that is a possibility, but when I pull this apart, I can count this as up for 1 and back for 2, up for 3, 4, and 5 to here. So if that's the case, and that wave 3 is here, then the wave 4 would be pulling back. Now, wave 4 pulls back to the previous wave 4 of 1 lesser degree, so it's possible for it to pull back into this area here. The other thing in terms of the trading levels is that we've got the first high above the level, but it hasn't been retested, and it should be retested because it's in the later part of the trend. It's not in the so you got the beginning of the trend and the end of the trend are the same, but the middle of the trend in the third wave of the third wave would be the strongest and longest. So I wouldn't expect it to do that as such, and in fact, if it found support on group 1, well, then we'll trade it up. What do we do? And we'll do the same from here, of course, as well. That if that 82.30 does create support here, then we'll go up from here. But I'm pointing this out because it affects the euro that much as such. So just looking at that on the inside here, from the 81.50, the fourth wave in this case. I've got it. We were counting it as up for 1 and back for 2, and the third wave and the fourth wave here, and that would be an A and a B and a C for the fourth wave here, and then the fifth wave up to make the third wave up through here. But if we pull this apart a little bit further through here, and coming from the 81.50, you can see that we've actually got a little 5-wave structure here, which we can call wave 1 here. I know this is sort of splitting hairs. Wave 2 here, the wave 3 to here, wave 4 to here, and the wave 5 to here. So that does give us that top of that third wave, which means that we'd be coming back into the fourth wave of 1 lesser degree, which would be down in the 81.50 here area here. So if that's the case, we're going to be seeing the euro rally off its current lows at the moment. So what we normally do is that if the 82 in group 1 here, if the 82.20, the pivot within group 1, if that becomes the tested resistance, then we can expect this to come back further. If not, if it comes down through here and bounces back up and finds support on here and then starts to move up through here, then you'll know where we are, and then that would be the trigger to short the euro. So when we're looking at the euro here, we can see that it's in its fourth wave here. So we can look at this being, it's probably the case now too. So we're looking at this as a fourth wave yesterday, and we know that fourth waves get ugly and messy and all those sort of things. So we can be looking at this as the A, the B, and the C here, a little bit like gold actually. So we'll be looking for a 5-wave structure up through this through this area here. So if it does develop support on top of the group 1 here, the 10, 20 and 30 here, then you can expect it at the midpoint where it will have a reaction from here, but support on that would take it up to the next level of supply. But normally the C wave here will have some sort of equality relationship with the A wave here. So a simple A wave, nice and sharp, simple, complex, and probably simple in this case as well. But once this is completed here, then we'll see this roll over to the downside. So for shorting the euro, you need the 130 as your retested resistance, or if it does push up through here, you need to be able to count the 5-wave structure to the upside, and that's what we'll be focused on as well there as well. So you'll see that in the charts there, but it's something that you can have a look for. So 5 waves up, and once that's completed, as soon as you see on a smaller scale 5 down and 3 up as a retest failing, then you can go and short that from there. The Australian dollar has got the RBA announcement today at 2:30, and in most cases it's normally, you know, buying, or the European session, American session, New York afternoon session normally would see the buying, and that can continue through the morning session as well. So I always just call it buy the rumor, sell the fact. So pretty much buying it, before whenever you get the chance really, and selling it before 2:30. So I think that's the case there. But what we're looking for here is any move to the upside here. Obviously 102 is retesting supply, so it's going to struggle through there, come back and retest the 101.72 area perhaps. But look, any move to the upside, we see that it's still part of a 4th wave, and we still see the trend to the downside moving down closer to the $1 here. And of course, as I mentioned before, when you're talking about the $1, you've got to bring in the next level, which is actually 98. So we can see that coming further down, even further down than that as well. So in line with the commodities moving down. So those commodity markets that we've been looking at, the CRB, the DJ, UBS, and the copper markets and so forth. The Australian dollar's been a leader in those, hasn't it? So that's confirming the trend, and it should continue. So selling the retest, and that selling it at 2:30 would be about right. Okay, well, that's really about it. Just to sort of recap a little bit, the S&P 500 is moving higher in our wave count, and we'd been looking this week to trade long in the robo trading to the long side. We had that event come in yesterday, which was coming out of left field a little bit. Perhaps I should have been more on the case, so I apologise for that. But we'll just still continue to trade in the direction that we're trading in to the long side on those markets, except for the materials sector, of course. So the consumers and the discretionaries and the IT and those sorts of things are to the upside. Alrighty, well, that's it. So good morning and good luck.